once again, this is Brian Wilson from Market Structure Edge, and today is July 16th. What I have for today is just a series of, let's call them like small topics. There's nothing huge that I don't think will take a lot of time, but just a number of small discussion points to kind of bring to your attention. And once again, as you have questions, feel free to put those in the chat. Happy to address those. So I'll go ahead and get started by sharing my screen. Once again, it's great to see everybody. All right, I'm going to get started with what we call redline conditions. And let me take this look back a little bit. For those that are very familiar with Market Structure Edge, you'll know this principle very well. But there's a normal rhythm to the market. And what happens over time is that this is broad market sentiment here in green. That's our demand algorithm. And over time, that will move over the red line. It's nothing magical above the red line, but what we have found over time is that broad market returns tend to get a little stretched when we do get above those red line conditions. And you can see once again the normal rhythm of the market. Market moves above the red line. Let me take this back a little bit farther. You can probably see it better. So here's movement above the red line, and you can see that it happens with consistency. Once again, that normal rhythm that plays out in the market. We've hit it a couple of times recently. I think we've hit it 5 different times so far during 2026. And what happens when we do hit that red line? I'm not going to spend a lot of time with this, but this is just a spreadsheet that I keep. What this is looking at is data going back to 2020, and it's measuring performance above the red line itself. So when we get above those red line conditions, think of it as the market getting stretched. And it usually does not mean that the market falls apart. Now, there are outliers, of course, but over this time frame that I showed you here, which is going on about 7 years, the average return is about 60 basis points. Are there outliers once in a while? Sure. Here's a list of some of the outliers. We had one in the early part of February. April. You can see last April was very similar as well. 12% return during that time frame. So there are outliers occasionally. Most of the outliers tend to be positive rather than negative. Once in a while, you'll hit a negative return there. But that's where we're at right now. We're once again above those red line conditions. And if we look at things from a daily read, we've actually already moved back below it. And let me show you what this looks like. So this is what we see on Market Structure Edge. It's a rolling 5-day average. That daily read has moved down to about 5.7. You can see we moved below it with yesterday's trading. So red line conditions equals stretched market structure, and it tends to limit overall gains. I mentioned an example this morning of the SOX, and I wanted to show you what's happening there. It's just a good example to me of edge data and how sometimes it can keep you away from bad trades. Now, if we look at when this started to deteriorate, it was right about the end of June. Once again, that's a potential inflection point. In general terms, we tend to hit inflection points either at options expirations or during the month-end time frame. We can see we hit one here during the month-end time frame. Semis started to decrease. If you recall, that was an absolutely incredible trade moving higher, of course, coming under a little bit of pressure right now. Now, with edge data, as most of you are familiar, you can create portfolios. And one of them that I have is the semis. And if we look at what's happening to the semis or what has happened to the semis, notice when it really started to deteriorate. It was right there around that monthly transition. It went below neutral. And when we have sentiment that is below neutral, it tends to prohibit gains. And you can see what has happened here over time. We're just starting to move higher just a little bit. One day is not a trend. I don't know if that will hold or not. But if you were thinking about moving into the semis, well, you certainly don't want to do it when sentiment is moving lower. If you're a true value player, maybe you consider it when you start to tick higher a little bit. Ideally, you would probably want to enter that trade, though, when we move above neutral. That's usually the kind of the sweet time frame to enter those particular trades. I want to show you what's happening to our model portfolio. And it's come under a little bit of pressure, as many of you are aware. So this is what it looked like before recent declines. And we were, well into the 50s, up to 56%, recovered a little bit once again into June. And look at that time frame right there at month end again, a little bit of an inflection point. And then we started declining a little bit, and you can see it's had a tough time. Now, part of what was picking up for this particular fund, if you were tracking with it, it was picking up on that semi trade. And what this fund is doing, it's picking up on passive investment as your lead behavior. That's one of the characteristics. And if we look at an example of what the fund is in today, well, there's 6 different holdings and there's 5 different sectors. So it's a little bit difficult right now for this fund that, once again, that's concentrating on passive money to find a theme. It had a well-defined theme for a period of time, and it's kind of lacking that at this particular time. I'm going to take you over for a second to our sister company. This is Market Structure Edge. And I wanted to share with you what's happening behind the scenes, both with the S&P 500 and with the SPY. Now, you'll hear us talk about the different behaviors, 4 different behaviors in the marketplace. And as we look at these 4 behaviors, what I wanted to point out is what's happening. This is underlying stocks. Look at the percentages right now. Percentages are pretty much in line. If you look at 5-day numbers, 20-day numbers, 200-day numbers, we're pretty much in line with all 4 behaviors. So everyone in underlying stocks is kind of doing what they normally do. That's not the case for SPY right now, though. So if you think about ETFs, which is where a lot of people will gravitate towards, it's easier, of course, to place trades in an ETF than it is in the underlying shares. Look at what's happening to passive money right now. So here's the numbers for passive money, a little bit over 16. Here's some of those recent norms. Norms are closer to 18, certainly north of 17. So we're getting a little bit of weakness right now on the passive investment side. We're getting weakness as well in derivatives related trading. And sometimes that can be an indicator. Maybe market participants are not rolling as many hedges and leverage as they were before. So just some considerations there to think about right now, at least from an ETF perspective, where we're tracking both weaker passive investment flows and weakness on the risk management side. Let me stop sharing for a moment, see if we've had any questions come in. It doesn't look like we have. So I will continue with our discussion. Let me find what my next item was. I believe I mentioned this concept this morning during the market desk note. The concept is that we're seeing a little bit of crowding into low volatility. And I keep a spreadsheet here just looking at the total numbers, both for momentum and low volatility. Here's the momentum portfolio. You can see that string where we just had momentum names off the charts, unbelievable number of names. And we look at low volatility. Well, it tends to be rather low. People tend to chase momentum over time. And you can see, we had a stretch there where everyone was in momentum and, everyone was really not moving into low volatility. Well, we're getting a stretch now where we're getting a few more people crowding into that low volatility trade. And one thing to think about there is, what does that mean? Are people scared of a possible increase in volatility and they're perhaps crowding into those low volatility plays? That's certainly something to monitor over time. If we look at the last time that we were over 10 and kind of measure it to the next time, that particular time we were up about 1.5%. Let's look at one other example here. And once again, I'm just looking at times where we were above 10 in those low volatility names. What happened over time? Well, there was a stretch where the market was down about 3%. So occasionally that crowding into that space, will be a little bit of a signal. I can't say whether it's a sure fast signal. I haven't spent enough time with it, but I just wanted to share with you what's happening, that we are getting more names or more of a push coming into that low volatility side of the equation. Let's talk about short volume for a moment. Most of you are very familiar with that. It's the other side of the coin in terms of broad market sentiment. It's up here on top. Short volume is down below. And what we've tracked, and we'll start with a 1-year look, and then we'll shift to a 3-year look. You can see that this was really a pretty significant move lower. It's the lowest that we've had during the last year. And part of that move lower would explain some of the, as short volume was moving lower, well, we started to get some gains in the broad market, kind of moving through that time frame. Now, if we shift this back to a 3-year look, we'll note, one other period that, had significance here. That was this period right through here. And I talked about this at last week's live discussion. But we can see that tremendous move lower that was coming into the election and then moving out of the election itself, broad market moving higher during that whole time. But what we saw afterwards, when short volume started to move higher from that point going forward, there really was not any further gains in the market. The market was at SPY was at 604. That was middle of December, and we fast forward to the middle of February, and that SPY was at 611. So essentially, kind of sideways trading there for a period of time after this huge move lower, and after we started to move back more towards norms again. No way of knowing whether we'll see something similar right now, but that stands out, doesn't it? That's a huge, huge short volume move lower. It's just something that I'm monitoring, that, perhaps it has similar characteristics to what we saw going back to the end of 2024. Let's move over to big tech for a moment. And what we've been tracking with big tech has actually been pretty good strength. Big tech moved well north of 8 for a period of time, got up to 8.7, starting to backtrack just a little bit now. We've had some really strong gains in Meta that has really pushed communication services certainly much higher. What's the takeaway here from a big tech perspective? Well, it's rolling over a little bit, but that sentiment score of 7.3 is still a very strong number. So as we think about, where we're at right now, and once again, we're in the first day of options expirations, we just kind of think through that. It's like, okay, well, big tech is just starting to roll over a little bit, but it still remains strong. And we actually see short volume that's moving a little bit lower right now. So yes, rolling over, but certainly still a very strong read. And one thing to think about here is whether this might counteract part of the current broad market trend. If we circle back to the broad market, this is a 5-day read for sentiment. It's just got to 6.1. It'll move below 6 with today's trading, but you can see that it's moving in the opposite direction. So sentiment is declining, going to move below that red line. Short volume increasing. Short volume was moving lower for the broad market. So differences right now in terms of the overall setup for big tech and certainly for the broad market as well. And this actually brings me to my look ahead. I said I had a number of topics. All of them are rather quick to cover today. We talked about passive money, and I showed you what's been happening on the ETF side of the equation. So the SPY, what are we tracking right now? Well, lighter overall passive money coming into expirations. That could be a possible sign of weakness coming out the other side. You can see the norms for passive money. Less derivatives related trading as well could also point to a possible sign of weakness. Now, do we get these two behaviors returning to action after options expirations? That could certainly that could certainly occur, and we often see inflection points where behaviors will be moving in one direction coming into a period like expirations, and then they'll change afterwards. And what we often see as well is that behaviors will tend to move in waves. And you'll probably see this better with the S&P 500. Not at all. I guess the SPY is the best look here. But what we're talking about with waves is where behavior is above the zero axis, and then it moves back below the zero axis. So periods of greater influence, then followed by periods of lighter influence. Usually what comes next then would be periods of greater influence again. You can see it with fast trading, lighter influence leading to greater influence here over the course of the last week or so. So that's one area to monitor. Does passive money return? And what happens to big tech? We see it rolling over a little bit right now. I'll take you back there once again for a quick review. What happens with the big tech trade? It is starting to roll over. Does it continue to remain strong? And once again, if it does remain strong, does that counteract some of the potential, I don't know if you can call it dangerous signals, but certainly potential for downside from a broad market perspective right now? We would classify what we're ultimately looking for when we're looking for being able to project broad market moves. We're hoping that big tech and the broad market are in alignment. In other words, is sentiment moving higher for big tech? Is short volume moving lower? It's the same thing happening for the broad market. Right now we would say they're mostly in alignment, but sentiment is weaker for both of them at this particular time. So let me stop my screen share. Question from Joe. Joe, let me go take a look at your question. Joe is asking, since we don't have access to the daily modern IR info, what indicators could we look to see if passive money is returning into the market? You can look at some of the key behaviors, and good question, Joe. We'll try to also give you a heads up if we see it in the data itself. But if you're looking for key behaviors, what do we see right now? lead behavior, fast trading, fast trading, fast trading, fast trading, fast trading, fast trading. It kind of gives you a hint what's occurring there. In fact, as I move down, I'm seeing fast trading just over and over and over again. You can, take a look at that in the sectors as well. Once again, I'm seeing a lot of fast trading as I go through the sectors. It's not completely fast trading, but it's pretty close, isn't it? And recognize that if we're coming into expirations, we tend to see more passive investment activity. Well, that's not occurring right now. Maybe that changes here over the next few days. And just a reminder for this particular, um, and let me go to a different site here to get you there. So on our Edge site itself, under resources, you can go to the expirations calendar. We try to bring these items to your attention with pretty much with every note that we have. But what we can see about the July series here is that it's different. So the 16th and the 17th, this is regular option expirations activity. Next week on the 22nd is VIX expiration. So we don't technically get to the conclusion of this expiration cycle until next week. Now, this particular cycle where the VIX is outside of the regular movement happens like once every 3 months. You can see it here. We move into August, it's Wednesday, Thursday, Friday, September, Wednesday, Thursday, Friday, October. Once again, it happens after expirations. So as we move through this expirations cycle, recognize that it's going to take a little bit longer than some of those normal cycles. Good question from Brad. Some stocks like SanDisk and Micron are coming off the bottom of the sentiment level. Does that suggest the potential for a rebound? Let's go take a look at a couple of those names, just to take a peek at what's happening there. So we take a look at SanDisk, and to Brad's point, just starting to peak a little bit higher. Lot of pressure, obviously, moving from 2,300 all the way down to 1,600. Tremendous amount of pressure. Does that become a buy? Well, it depends on what type of investor you are. If you're more of a deep value investor, yes, it does. But, also recognize that there's no guarantee that this is going to get back to 5. So it becomes more of a deep value play, and you have to be comfortable with the fact that, this is a stock that's been under a tremendous amount of pressure. The safer way to play that is to wait for it to get back to neutral before re-entering. Let other people do a little bit of the hard work in terms of stopping some of the declines. And I think Micron will probably be similar, and very, very similar. Just getting back to one, just now starting to peak higher. Once again, if you're a deep value investor, you could potentially take a chance here. The safer play is to wait until it moves back above neutral. Good question from Candace. Do I like to trade more low volatility names during options expirations? Candace, I don't tend to trade low volatility names. It's just a personal preference. I tend to like to make more money on those momentum plays. Like I said, it's just a personal preference. I would say that is a little bit safer during expirations itself. Recognize, and I wrote about it in the note this morning, you're getting, all these thousands of contracts coming into play at the same time, and market participants are making decisions regarding it. What do we want to do with our hedges? What do we want to do with our leverage? Are we going to drop those trades? Are we going to let them expire? Are we going to roll those particular trades? And that's part of the reason as well that I don't like to hold positions from Friday into Monday. So think about what we're going through Friday into Monday. We've come to the conclusion of the option expirations period. The focus will shift to the new series then on or will shift to the August series then on Monday. And will the strategies and tactics remain the same when we make that shift? They might, but there's no way to really guarantee that. So there's really only a couple of times that I don't like to hold daily trading ideas from one period to another. One of them is Friday to Monday with expirations. Another one would be that month-end time frame. We saw what happened end of June going into July. You can get some strategy changes, and everyone can change direction at those points of time. Question from Gene about Double A and Netflix coming into earnings. And let's go take a look at that. And let me make sure that I'm sharing my screen. All right, so set up for Netflix, and I think they report after the bell today. It's okay. It looks a little bit like all of big tech right now. If you recall, big tech sentiment declining. This is almost an identical number. 7 for a sentiment read, and short volume. That's rather low. Netflix, it has a pretty good setup. Ideally this would be continuing to rise, or you would be 10 out of 10. But I mean, this is okay. It's certainly not a poor setup, not as good as it could be, but it's not bad. If we look at Alcoa, what's their setup right now? Much weaker. Sentiment is 2.6 out of 10. Short volume is above trend. That's definitely more of a value play. So of the two, Netflix would certainly have a much better setup going into their earnings print. Well, everyone, we have put in our 30 minutes already. Thank you for your time today. Thank you for your attention. I don't know if anyone has any additional questions. If not, we will go ahead and close today's meeting. Thank you once again for participating today. I really appreciate it. Take care.